afternoon, traders, and welcome to today's daily market review. It is Tuesday the 14th of July, and today we're going to return to a previous stock we had looked at, which is Babcock International. Now, back on the 2nd of July, we identified a ABCD pattern in Babcock, which began on the 8th of June. We had also identified two Fibonacci cluster zones, one at 1068.76 to 1064.19, and our second was at 1051.32 at 1050.73. The market was in a bullish momentum, and we had also identified a high probability time window of the 7th to the 8th of July. Now, back on the 2nd, we had seen the penetration by price action into our first Fibonacci cluster zone, and this produced a bounce from around about 1064 up to around 1092. Now, even though we had seen a relative bounce off the first zone, the market wasn't in line with our Fibonacci time window. Okay, so we had already seen a small bounce from the penetration of the 1068 to 1064 zone, but this had taken place well in advance of our time window, and the bounce took place around the 29th of June. Now, just because the price and the time action doesn't align doesn't necessarily mean that the rally won't continue up into our target points. What it generally means is that the probability of the trade will be less, but what we generally do, as shown in the previous example, is once we see an initial reaction from one of our Fibonacci price zones, is we will drop down to a lower time frame. In the last example, I believe it was the 60-minute time frame, and we will look for some type of entry trigger, whether that be a moving average cross or the taking out of a swing high or low. Once we see the trigger happen, we will then enter the trade, and then we will manage to trade up until we reach one of our target points. Now, one thing we did point out was the zone of 1109, which was a potential resistance zone to the rally. Okay, so 1109 was a potential resistance zone. This would be an area where once price action reached, we'll be looking to maybe trail our stops or apply some type of money management strategy to the trade, just in case the resistance holds and the price action begins to move back to the downside. So what we're going to do, we're going to fast forward to today's price action on the 14th, and we're going to see exactly what Babcock has done. So this is the chart of Babcock as of today, the 14th of July, and the first thing we can see is that we have made a considerable rally from our second zone. Now, towards the end of the video on the second, there was a few factors as to why I believed the correction wasn't over. Namely was the date, as mentioned before, and also some Elliott wave counts that I won't go into. But the very significant thing to notice is the date that the actual rally took place. Okay, so the rally actually took place on our projected time window, which was the 8th of July. So for anybody who has any kind of doubts as to whether time analysis is a valid and valuable trading strategy and works within when applied to the financial markets, this is one example of hundreds that I could show in which the projected date of a reversal has been shown and predicted well in advance of it actually occurring. Okay, so we saw the price action from the second come down into our second zone of 1051.32 at 1050.73. We can see the market made a swing low on the 8th of July which was the projected time window of the 7 and 8th, and then we've seen a significant rally up to 1105, and look where the market has found resistance. The market has found resistance at 1109, which was our projected resistance zone, which was created from our ABCD pattern. So what we'll be looking for now is to tighten some stops, and then if the market manages to break through the 1109 area, we'll be looking for a continuation up to 1176 and then on to 1207. Okay, so if we drop down to our 60-minute time frame, if you remember from the last example, we were looking for a cross of the moving averages, and this took place on the 9th of July at 11 o'clock, and we was also looking for the taking out of a prior swing high, and we had a swing high which occurred here, which we can see the market took out and then created a moving average cross, and this would have been a valid entry trigger for a buy. Okay, so in terms of Fibonacci price and time analysis, the individual components by themselves are very powerful when used in combination with momentum, but when we have Fibonacci price and time analysis together with pattern, it makes a very powerful combination, and it allows you to not only predict the times but also the prices of future market reversals. And again, guys, this works in all markets and on all time frames.